And welcome back to the Running on Grass podcast. I am your co-host, Logan Pribbeno, here with Eamon O'Toole. How we doing today, Eamon?
Good. Good to see you, Logan. How are things in Nebraska?
They're good. Caught a rain, went up to Schuler Angus yesterday. They won the Leopold Award and got to visit with some folks there. Got to see some country. They had an inch and a half overnight. Folks in Nebraska are finally kind of getting a little rain. We're not out of the drought by any means, but, in the last 3 weeks, it's been summer leaf for most of us. How are things in
Wow.
your neck of the woods?
It's been really, really hot, I think, at least for a mountain kid. 90 degrees is a smoker for us. But I did talk to Chandler this morning. I'm on the road, not at home, but I talked to Chandler this morning and he said they got a little rain yesterday afternoon and it was currently trying to rain a little bit right now. So hopefully this El Nino's kicking in for me.
Yeah, I hope so. And it kind of seems like it is in our area at least. And you can pop up like Sydney and the Panhandle got a rain last night. You can pop up that radar and you can just see, the western high plains getting moisture. And it's not every place everywhere, but at least we're getting those pop-up storms on a frequent basis.
Yeah, I flew over in the plane to Idaho the other day, and I was going across like Cokeville, Wyoming, which is way western Wyoming, only I think maybe 3 miles from the Idaho border. And there's kind of all these really cool valleys that, it goes way up and that drops down into a beautiful valley and then goes back up again. And there's just water in every one of them. And it looks like they've been getting some rain over here in the west that some of us haven't seen around the state too, because even their high country was greener than other places I've seen.
Nice. Have you any change in plans yet, or just keep on keeping on with the graze plan and all that?
We're in pasture number 2, 3. We usually go we have 5 summer pastures that in Wyoming that will move our purchased heifers around that will breed and then sell. And we went through the first pasture and it was fantastic. And I probably left more than I could have, should have, but it was so hot and dry. I just thought, you know what? I don't need to take that much. If it was raining, I would feel better about it, but we hadn't had any rain for quite a while. So I left quite a bit so that I would have something to go back to next year. And next year, I should be in good shape there. And I've got 2 great ponds in that pasture. And so that's really good. I'm in the second and third pasture, which usually I hit one and then hit the other. But because my water's so sparse, I have a guy living up there with those cattle and he's moving them around. So they're using both the feed on one side, which is the feed's great, but it's the water. And so he's moving them back and forth so that they're not just staying in that one pasture. And so we'll see how long that lasts us. And then my very last pasture is in really good shape and I've got water all over it and the grass is good, but I'm living off of last year's water in my ponds, not a whole lot of this year's water.
Yeah, we're
So
kind of living off last year's grass roots, essentially. The crown's got very well established. But how about I give a quick shout out to Eastco and then we can talk about what an overview so these guys know what we're going to get into today.
yeah, this is a great time to get into LRP stuff.
Yeah, it's a great time to get into LRP stuff. We're going to talk about the market segment. And I just wanted to give a shout out to the annual forage program. That deadline for that for next year is on the 15th. So you need to make a call this week to make that done. And Eastco is a great rancher owned, rancher led group that can help you make those decisions. I use annual forage and recommend that everyone does as well. So visit eastcogroup.com or email them at info@eastcogroup.com. Thanks, Eastco. Got the hat. But Eamon, what are we gonna hit on today? Let's just give them an overview.
We've got a lot of things. When we put this thing together, I was reading through it and I thought, boy, Logan, you've got a whole overwhelming amount of stuff to look at here.
You can tell it was a holiday weekend, can't you? I had a lot of time to work with this one.
Yeah, well, I was traveling, I was sending a few things around, but you mostly put this together. So weather and grass update, which we've already talked about a little bit. I'd like to hear a little more about what's going on in Nebraska. Market reality check, quick price snapshot, and then there's some several guys that put together their thoughts on where we are with beef and beef demand and cutouts and those kind of things on X, and then Derrell Peel, the legend, and then we'll talk about the new USDA export sales spike and let's talk about what's going on in Steamboat Springs, Colorado right now. We've got the largest sale in the whole country going on, and boy, prices are hopping. So that's been exciting. And then bring it back home to you and I and what we're doing at home, what we think we're going to do, any change in plans, and then inflation, liquidity, The Kalshi tweet was very interesting. 10 billion is going to be kicked into the economy. I mean, we can go on and on. We've got a lot of stuff to talk about. So let's
Yep, I think that's a great idea. So right into market reality. Where are we? Where are we sitting right now? So feeder cattle are oh, I had that tab open, but I think August is at 360 right now, so a little down from the some highs. The barn prices have not been tracking the board. I saw that we hit on the actual index. It was 380 last week.
Yeah, and I feel the same. I was a little frustrated seeing what's going on in Steamboat this week and then seeing what the board is doing is just it's not reflecting reality. And that's a little frustrating, I think, for, everybody in the business. But the guys behind the computers got to make their money. So
That's true,
they'll
but the interesting thing about the feeder cattle contract versus the live cattle is that the feeder cattle contract has to settle to actual price.
right.
So the contract has to expire at the barn price essentially. And the live cattle market does not have to do that. There's always basis risk because it doesn't need to settle to the actual negotiated price.
Right, and where you're, messing with forward contracting on the fed cattle, and then when you get down to what's actually happening on a daily sale market, those guys are playing more risky games in a lot of ways on the live cattle market than they are on the fed. Would you say that's accurate?
Yeah, I think you're accurate, but still strong. Garth had a poll on Twitter where he posted, and he's done this a couple times. It's been very fun to follow along. He did a poll for Ag Twitter, and 67% believe that the feeder index will trade above 380 again at some point in the 2020s. So we have the majority still long term bullish, and then 33% was the no vote. What do you think about that?
Do you think that we get back into the $4 conversation, or is 380 the new number?
I am watching beef, my friend, is what I'm watching. And we're going to need to see higher beef prices to hit that $4. It's in my opinion.
And what do you think about what Donald Trump did with Walmart and having them lower their beef prices?
Yeah, I wonder what that looks like. Is Walmart just making less on it? I have more questions than anything.
I am the same way, and I was hoping maybe you'd have some insights, but I couldn't figure out. I'm like, are they making that much money, or are they just saying, okay, we'll take a little bit of a loss on the beef because we make a lot selling Cheerios, or
Yeah, and
however
a
that
lot
looks.
yeah, a lot of times beef and particularly hamburger is a loss leader for stores like that. So it's not unusual for them to sell that at cost just to get people in the stores and get those higher priced items in their cart.
Right. Well, there's a lot of beef going right now, and it's not just here in the United States, but when you saw that USDA rollout, the amount of beef that's being sent to Chile and what was the other country that was super high that hasn't been Chile's was up, and then shoot, it was
Well, yeah, I don't remember what country it was, but
Italy. Italy was the other country.
it was a 500% increase in exports from the prior week. So it was 126,000 metric tons for 2026 delivery, which is very unusual. The traders initially thought that the report was an error. They suspected that it was in kilograms and not metric tons. And so they asked the USDA to go back and look, and they went back and looked and said, no, this report is accurate. So, the traders were shocked.
So is that the United States trying to get more high quality beef out the door because we just can't eat it all? Is that what's going on there?
I don't know, and I think that's why everyone is so shocked is, the price of beef is particularly high in the United States especially, and, exports have been down on a volume basis, not on a dollar basis, but on a volume, and then here we go, and it just is, a 500% increase, which is crazy. I mean, I wonder if we're gonna see this continue, or we're gonna see a rise in beef exports?
Yeah, and 29 metric tons on the physical shipments that week were at market year highs. And then so Chile took 38,500 metric tons, and then Italy, which is a totally different size, but they're just shy of 7,000 metric tons.
Yeah. So they imported more in a week than they have in a year before.
Right. So what's leading to that, do you think? Do you think it's this that many more people are going to Chile or Italy in the summertime, and that's gonna pick that up, and they think we're gonna have a crazy amount of people getting here or people moving there?
I don't think so. I think it's domestic consumption. I think US beef, it's prime, good stuff, and that's what they're demanding.
Boy, I just have more questions than I do answers on
I
all
do too.
this. And, having gone to Italy or to Japan and South Korea on a US Meat Export Federation trip, learned a lot and figuring out the metric ton thing and how big is an actual metric ton. It's a lot of beef, is what it is. But to come back and then see these numbers and how much is coming in, because it's not only is it what's going in and that they're at these record high prices, but then you also have all the tariffs and those pieces playing into this. And that's why the tariffs were such a big deal and everybody was making so much noise about it on the front end was the cost of this stuff just to get it into the country is pretty dang expensive in some cases.
Yeah, importing and exporting is not cheap, and there's a lot of shipping costs, regulatory costs, and spoilage, and it's not an easy task to ship something like beef around the world.
Right. So I would say let's just stay in touch on that and let's keep talking about it as we move forward and as we learn things. I'm sure a lot's going to come out here about where this is going to go.
Yeah, and here's one other observation on the beef. This is also a tweet from Steve N. He's the Kings 1973 on Twitter. And he said the first time in 20 years that the beef cutout was never higher in Q2 than it was at the end of Q1. It highlights how exceptionally strong the Q1 2026 fundamentals really were. So what he's saying is for 20 years in a row, we get a Q2 high in beef. And that makes sense because you got Memorial Day, you got Mother's Day, you got Father's Day, and, ending with 4th of July sales. And so what we saw was beef could not get higher during that period. And that has me a little bit worried.
Does some of this have to do with the increasing drought or the drought around the country and that it's taken over? What are we at? 70% of the United States or 75% of the United States is in drought?
That could be it, but I don't think that affects the price of beef right now. Like Q1, Q2, we're into Q3 right now, but I don't think the drought affects beef pricing today. Long term certainly does.
Right. Well, you have this piece, heifer slaughter as a percent of fed cattle slaughter is the 12-month moving average. So you've got these heifers that are so many more in the system, which we saw in March.
Mhm.
And how many of those heifers are now starting to move into the supply chain, the beef, box beef prices?
Yeah, so Derrell Peel has still record high heifer kill show, and the graph shows it really clear that we're here, and the past cattle cycle tops, it's been significantly lower. So Derrell Peel is still very bullish on the supply, and this, for me personally, this is the tale of two cities here. Beef is starting to back up. Q2 is lower than Q1, which is a disturbing trend because Q3 is typically lower than Q2 and vice versa. It's very seasonal into the summer. And it seems as if the consumer is starting to back off on the price of beef, and we are seeing some discounts. On the other hand, we are still killing a record amount of heifers. We're still not even into the level where we can maintain the herd. We're killing enough heifers that we're not even in maintenance mode for the cow herd. So I'm really, really worried about the beef backing up, and that's where those dollars enter our industry. Those are the only real dollars that enter the cattle industry is through the beef industry. But there's no relief for supply in the long term. That's what I'm looking at, and that's what keeps me up at night.
Right. Well, luckily, we're in a situation personally that we both have a lot of heifers, both bred and breeding. So I think personally for my operation, I'm in pretty happy with where it's at. But if I'm going to be in the breeding heifer business next year, that's going to be an interesting number to go buy a heifer.
Yeah, especially when on Superior, it looked like any old wean calf was $3,000 a head, 5 weight roughly.
Yeah, I saw some on the heifer side, 26-ish
Mhm.
was kind of where those look like they were running around at, but boy, steers were ringing the bell all day.
Yeah, yeah, and today is the Bassett barbecue sale in Bassett, Nebraska, which is very famous for what it brings, and it just shocks everyone on Twitter and all of the different social media because they're really good uniform, black, great Highway 20 Nebraska steers, 10, 9 and 10 weights. It'll be really fun to watch to see what those will bring. Homer Buell was at the Schuler Angus Field Day, and he's got some 10 weights to sell. He check weighed them, and they were weighing 1050, which if you're a stocker operator, that's the good stuff right there. You want them 1050. That's a pleasant surprise. He wasn't thinking they were going to be that, but they had a range of expectations to what they were going to bring, and the lowest someone said was 3450 and the highest was $3,700 for a 10 weight. So
Wow.
just wow, good times, huh?
We're so far from anything that we grew up with seeing. I mean, we've talked about this before. We just didn't grow up with anybody ever being excited about where the market was and prices. And we wonder why nobody wants to be in this business. But this is an exceptional time in the market. We're all, I think, have a lot of opportunity. Heifers, like we said, were 2,600 yesterday. And I saw 24 on the low end and 20. It just went up from there. I'm sure there was stuff that went up to close to 3,000 on the heifer side, depending on what it was. But when we talk about you and I having to go buy heifers, if that's the business we want to be in next year, what is that? Is that a $2,800 heifer to go buy her this fall or this next spring or whenever decide to get into that game after it was like 2150? Well, the first year was like in the 19s
Mhm.
and it was 21s and now it's 25s, 26s to get into it.
Yeah, so I'm gonna need to buy something here sometime in the next 6 to 8 months, and
Emus.
yeah, don't know exactly what that is going to be. We had that fall break last year, which was my friend. I was able to get some bought for 19. Not very many, but I was able to at least get a couple potloads for 1,900, and they ended up being as high as 24. So you and I think, averaged pretty darn close to 2150 is what you said for a heifer.
Yeah.
Yep, yep, that's
Yeah.
probably where I'm
It
at.
it was getting up there, and so it's gonna be fun to go ask a bank for money to go buy 2,800 heifers to say, "Yeah, hopefully they're gonna bring, like, 5 or 6,000 a head," because that's what they're gonna have to be to make those margins work.
Yeah, and I've told guys before, volatility is my friend. And a good up and a good down in a year is not all bad for me. I look to sell when it's good and buy when it's bad.
Yeah, and that's one of the big differences in our operations is you can grab a cow or steer or whatever out of a pasture any day of the week, any day of the year. Where for me, when they're at your place, I can do the same. But when they're back here in my country, when I'm turned out, they're gone for the summer. And unless something, cows all of a sudden are worth $10,000, we would have cowboys in the country and we're going to go gather cows and we'll sell some cows.
Sure,
But in general, the bump is not enough that I would ever think I'm going to go gather my cows that are being bred in the forest right now and bring them home. That
sure.
is that is their home until it is time the Forest Service says you got to come home. So we're very much more locked into our seasonality here than you are.
Yeah, I would definitely say that is true. And yeah, because of drought conditions, we've went and sorted some off and shipped, just topped them off when we're dry. We're understocked a little bit, so we're not doing that and breeding a lot of them. So it's a little bit different there where you got to preg check them. But yeah, the market's strong. Watching the Jones family, Diamond Bar, they were at the field day too. They were on their way to Steamboat to sell their calves. They have been programmed calves in the past. I don't know if they're still programmed calves, but they're definitely one of those ranches where they sell them weaned in February at like 7 roughly. And so they're always, people take pictures and it's always brings an astonishing amount of money because they just do a particularly good job and people like them weaned in February. If you're going to buy calves, receiving them in February, the feed yard's really, really like that. So it'd be interesting to see them sell in particular, especially if they are program calves like they have been in the past.
Right, and for me to in my part of the world, to get a calf to February, you've got quite a bit more money into her. You'd have to see a huge uptick, and that calf probably doesn't look great where I live because she's already been through most of the winter.
Mhm. Yeah,
So
whereas they, their ranch is north of Stapleton, so they're in the feed belt, let's call it, and so feeding them for a couple extra months is going to do a lot for you. You'll be able to control your weights a little bit better. With the price of corn right now, the more corn you can put in an animal, the better off that exchange is. So very different, like you said, Eamon. There are things that we can do in Nebraska that you just can't feasibly do in Wyoming.
yeah, a lot of opportunities, but I think the big change, and we've talked about this before, is you can winter for cheap and I can summer for cheap.
Yep,
And
you're
I've
exactly
I've
right.
got the federal land component and you have the corn component.
Yeah, the very, the wonderful corn component, the thing that gets all cowboys really excited about ranching. Corn stalks and corn growing.
It gets me excited when I'm starting to see winter come on at my house.
Yeah, I bet.
I love thinking I'm gonna send these to Nebraska and I'm not gonna feed them all winter in 3 foot of snow.
Yeah, that's a good relief, especially Southwest Nebraska where it's usually pretty nice.
Right. Well, let's talk a little bit more about what's going on in Steamboat. I think we're going to start seeing some mountain calves go here. My brother-in-law is here with me, and he was saying I think his calves sell on Friday, and he's up in
Mhm.
north central Wyoming. So we got a couple more days until we start seeing some of our stuff go. Are you seeing no Kansas and that
Yeah.
part of the world's gone a little bit? What are you seeing in your part?
So the Jones family isn't gonna sell till tomorrow morning, so I don't think we've gotten into the Nebraska calves yet. What I was watching was Kansas and Oklahoma. So the 3,000 was a wean steer out of Oklahoma, and I would expect north of 70, like you and I have talked about, north of 70, the quality tends to improve, and so I would expect the price to improve as they move north into Nebraska and the Mountain West.
Yeah, and do you think this in August that these sales keep going up like they did last year?
If
Or
they
do we
do,
stay?
if they do, it'll be a ripper for sure. But like I said, I'm watching that beef too, and yeah, I don't know, and we've built a bunch of bunk space in this country, and so right now the bloodbath is between the packers, and I do think that we're going to see some bloodbath in the feeding sector as they decide with the limited. We're not short of feed yard pins. We've expanded that substantially in the last 10 years, and the shortages in cattle, and so I would expect at least a period of a year where the feed yards are, bleeding and trying to figure out, who can stay afloat and who can't. It's interesting that it's really stayed in the packing sector. Those losses have really just concentrated in that packing sector for 2.5 years now. And the
Right.
feed yards have just the MO has been buy, keep full, and the market will bail you out. And that has worked well for a long time now. And so it'd be hard to be a feed yard operator to be like, hey, for the last 4 years, I've just bought them. They didn't make any sense, but the market has bailed me out. So it'd be interesting to see if we can keep layering them in and they get more expensive as we go.
Yeah, the bullish guys with bankers with iron stomachs were able to hang in this thing and have done very well. And people that didn't, I told you when I flew out to see you, there is a lot of open feed yards just
Yeah.
empty. And I don't know if some of those I'm sure are custom and bringing in either their neighbors' replacement heifers or whatever. But overall, there can't be that many. And there were a lot of feed yards that were half full or a quarter full. And then you go buy foot feeders and they're full.
Yeah.
So
That is
if
their MO.
yeah, if you wanna be in the game and you wanna, be a feeder like Foots are, it looks to me like if you're bullish, like you said, this thing just kept you in the game and you were doing fine for the last several years, so
Oh God, the Foot family have literally, they are very famous in that they never hedge a hoof, never have. Man, has that been the right call for 6 years in a row? Talk about a legendary run for them. They have made more money than God in the last 6 years, I imagine. I don't know. I don't have any sort of insider knowledge, but just by knowing that they kept full and they kept their gas to the pedal. Good for them. Their
Yeah,
dad, their dad would be proud of them. He is looking down and smiling. Bob is.
their kids are sitting at home thinking, I want to be in the feeder business.
Yeah, yeah,
This is
exactly.
fun.
Yeah. Yeah, they've got some college age kids. They're, probably thinking about coming back, and they're like, "Wow, this looks like a heck of a deal."
Like when I first came
6
home
years
from
of it.
when
6
I
years
first
of freaking, well, let's call it 5 because 2020 was, not a good one. But you could get if you started buying in 2020, they were working. You got to remember in 2020, this time you could buy a 9 weight good steer in Nebraska for $1,100. That's how far
wow.
we've come
Yeah,
in 5
that's
years.
3 times. 3 times.
Yeah, 3x
So,
and then some.
yeah, when I first came home, you couldn't make a mistake. Everything was on the rise. So,
Mhm.
my dad I remember him telling me, "It's not always gonna be like this," and you're thinking, "How can it not be? Things are so good." And then 17 happened, or 16, 17 happened, and you're like, "Well, I guess that's what he meant by this thing doesn't always have to be good."
Yeah, I feel, for the younger operators, and I talked to some of them this last week. If you've been in the cattle industry for only 5 years,
Good for
God
you.
have mercy on your soul.
Good for you.
Yeah, good for you. You're thinking, "Man, this why doesn't everyone do this?
Yeah. That was Eamon O'Toole's thought
This is
in,
a license to
2010,
print gold
2011.
bars."
Yeah, I didn't realize you could just print money like that.
Yeah.
But like we've said before, we make it sound like we're all making this money and it's just insane. And if you're watching your P's and Q's, there's money to be made in this business right now and in general, I think. But fertilizer and those things are going to have to straighten themselves out, or people are going to have to cut way back. I know I personally cut back from putting on, regular amounts of fertilizer like everybody always has in my community to put up a big hay crop. And last year, part of it was drought, part of it was, there's a series of reasons, heat, different things grow hay, grow to every crop. And yesterday, my neighbor who puts up my hay for me called me and he said, "Hey, I know that you're not around, but I want to tell you what the hay crop did. It's basically double of what we did last year."
Really?
Yeah.
Never in a million years would have expected that after the winter we had, or you had.
Yeah. But we had a community meeting early this year and we said, all right, this river's not going to last till June. It did get us to July. It gave us a month longer than we thought it would. And it's fallen off pretty hard. But we soaked our system in the alluvial and it is wet. The underneath the soil is wet. And it was still freezing at night. And we're all sitting there like, boy, I hope we're not going to stunt this grass. But if we don't have water on it, it sure can't grow. So let's just keep pouring the coals to it. And we did. And then the heat came right and we had some warm nights. And that's when you really grow grass, is when you get the warm nights. And yeah, basically bumper crop at Ladder Ranch's hayfield this week.
Wow.
Pretty exciting.
I am shocked. So will you guys see some relief in the hay prices this winter?
I don't think so. I think that overall in the West, that a lot of guys that do dry land and different things like that will not have any hay to put up.
Yeah, I
And
talked to Lee Leachman at that field day, who's always got 100 things. He's got 100 irons in the fire, and he bought that property by LaGrange, Wyoming, and he said it's super dry. They don't have a lot there.
yeah, it's going to be really tough. $300 plus for good hay, and you're going to be 400-ish for alfalfa. And actually, I haven't even talked to you about this. I'm going to put your cattle on a little different system, and we're going to move them in to some other fields. And I'm going to put up that alfalfa because it's too valuable to run yearlings on. So we're going to move yours over into some other fields we have, and we're going to put up that alfalfa instead of grazing it.
That's great. The
Which
nice
ought to
thing,
keep them alive, because last year, that second cutting of alfalfa, that's where we lost 3 head.
yeah, and I think you'll be really surprised what you get off of that alfalfa when you graze it versus cutting it. It is really good for that perennial plant. It responds different to how it is grazed and how they pluck it. It's very different than a cutter bar and how the plant responds. So I think you'll be pleasantly surprised. I really am a big fan of intermixing haying and grazing and grazing sometimes, haying sometimes when alfalfa's $400, for example, and it just really it just invigorates that plant when you can graze it occasionally. I have a buddy here large who was doing the kind of the same thing basically because we were dry and the plant responds favorably to it.
I've never done it in my life, and like you know, we've been doing this with your cattle for several years, and we've bounced back and forth from haying to grazing, but probably not in a long enough scenario to see a big difference. But with that alfalfa where it had never been grazed in the summer before, and then you're not taking the same as a cutter bar would take, you're taking really 40,
Mhm,
50% of it maybe,
mhm.
and then leaving the rest. And now we're going to come back on that. We only took 50% on the first graze, and now we're going to come back in there and we'll get all of that plus whatever comes up. And I think we've got about a month until we cut that. So
Nice,
it should be exciting. I'll keep you all in tune on what comes out of that cutting,
nice.
but it was pretty exciting. One
Yeah.
little thing I wanted to hit on, and you and I didn't really get to visit about this too much, but I was talking to a guy the other day after we had our talk about employees, and this guy had just lost his employee, and he'd been with them for a while, and like I don't know, 6, 8 months, and then the guy right before haying season says, "Hey, I got another job opportunity. I'm leaving." Which, if you're a rancher, your only guy that works for you leaves right before haying, you're like, "I
Yeah.
guess here we go. I'm gonna have to do this whole thing myself." So if I were him, I would get my little kids in the tractor and have them start
Yeah.
raking. But, you know, I think that there's a piece to it that if you're the boss and you have one guy, that guy's working alone a lot. You're working alone a lot as a boss. And some people like to work alone. Chandler and I were talking about this. Chandler said, I'd never worked on a team with people before until I came here. He
Yep.
said, I had to learn how to work on a team when I came to work here because I like to work alone and I like to do things by myself. And partly for safety, partly for what were the other reasons you had talked about when we visited a little bit about this?
Safety, camaraderie, collaboration, and at Wineglass, we were more team oriented. I've got one guy, well, I've got two guys. My dad really likes to work alone, does not like to work as a team. And then Tino, our fencing guy that's been with us for 16 years, he cannot work as a team. But pretty much the rest of us are very much team focused. And I always tell the guys that work for me, I said, you never, on a ranch or a farm, you never want to be the one hired man. It's just a bad dynamic. A lot of times, there are some positives, but the people that I know who have been in that situation, there are some positives, but the negatives generally outweigh the positives.
Yeah, obviously you're saving some money in payroll and there's a bunch of different pieces that come with payroll and having a pickup and every employee, what do we figure there's at least $70,000 when by the time you roll in all their other pieces
Oh,
that you pay
minimum.
for.
Actually, I was having a conversation with Corey Cable with Cross Diamond, and they figure, and he's sharp, Ranch for Profit graduate, and he figures his H2A South African farmer costs him $32 an hour, all the costs baked in.
Yeah, I've never looked at it hourly. I haven't broken it down to there, but I figure it by the month because that's how we pay people
Mhm.
here. And it has been so their minimum pay I think is like 24.50 a month, and it goes up like $50 a year.
Mhm.
And there's no end to that. It doesn't matter what the markets say or anything. Those guys get this huge bump every year, whether they're good, bad, or otherwise. And so there's been a lot of ranchers that want to tie that back to commodity prices for like if you have a sheep herder, that should be tied back to the commodity prices for what sheep bring. Because if the lambs take a dive and the lamb market swings way harder than the cattle market does. We've had years where you make a buck, the next year you make a buck 75, the
Mhm.
next year you're back to a buck 25, and then the next year you're at 250. Like it just is all over the map and you have no idea what it's going to do. We see that number to be because you're paying for everything. They can come up here in underwear and a trench coat and
Mhm.
you've got to outfit them in all their clothes,
House
everything.
them, transportation, all the
Yep.
food. They don't spend a dime while they're here. They're on your dime.
Exactly. So by doing that, I figured that number to be 3,000 to 3,500, depending on what that guy's doing. If
Sure.
he's a sheep herder, that cost is different than if he's an irrigator.
That makes sense.
Yeah. So I think that we can, at least on my operation, I like that we work in teams and
Mhm.
I have my guys are good. And you and I talked about this a little bit. If you have good guys, then they can get a lot of things done and it's done right. If
Yep.
you have bad guys, it's a couple of lazy guys sitting around that you're paying for both. But if you have two good guys, it's like getting the work of three or four guys done.
Yeah, we are in a position just like that where And we did not used to be this way. I always tell this crew, I said, the first thing that happens when we run into any issue at Wine Glass is you make a phone call and you get 2 or 3 guys out there solving this problem. I said, man, when I came back and I stumbled across a problem, it was like, well, Logan, you're figuring this out on your own because everyone else is too busy to come bail you out most of the year. And so it's just been nice to be collaborative. And I've just tried to point out to the team how that's a real benefit to, hey, I just ran into an issue. It's like, well, let's throw some bodies on it and try to get it solved. And it's been worth it. As you said, it's extra payroll, but it keeps people around in particular, I think is one of its biggest benefits is that team or collaborative working.
Yeah, and I think that's the same reason you and I can do a podcast in the middle of the week in the morning is
Mhm.
because we have a good team out there. And so if that one guy quits us, you and I are like, well, I guess we better go do that job and we can't do this.
Yep.
Or you can't go on vacation. You can't go do anything because if your one guy leaves, you're all of a sudden totally alone.
Yeah, that and that is interesting, and that doesn't. We've never been a one guy outfit, and I don't think you have.
Not in my
So
lifetime.
yeah, we're. I don't think Wineglass may have been for the first year, but after that, we've had to deal with labor and significantly more in the earlier generations when it was more manual labor. But anyway, we're not as qualified. But it seems like if you had the one guy and he leaves, you're just taxed so bad that you're so incentivized to keep the one guy around that you just, you know what I mean? You almost do anything to
You
keep him.
will. He asked for a raise. He asked for anything. And you're like, what
Yes,
are my
cheap shot.
options here? I either got to go look for another guy or give this guy what he's asking for. And
Yeah.
he's got you handcuffed.
Yeah, I think so.
Yeah. Well, let's switch gears here a little bit. And I just want to ask this real quick. We don't have to spend a bunch of time on it, but you and I have talked a little bit about what we think about doing all the gap programs and different things natural. And since this sale's going on right now, I haven't watched enough of it with these calves coming in to see if they're bringing a premium or not. But when prices are this good, I personally feel like it's hard to add that to it's not worth the time and money and effort to add that to my calves that they bring that much of a premium when it's a market like this. But when the market's down, I think it brings more of a premium. You've done these more programs than I have in the past. Tell me what your thoughts are.
I 100% agree with that. We ran program cattle for 5 or 6 years, buying them and producing them. And yeah, if you're looking at a $3,000 calf, you just want as many of them as possible. And some of those programs kind of handcuff what you can feed, what you can do, and then you have the fallout that aren't going to make it on the truck, and it comes with limitations and extra work. And I 100% agree with you that I do not see the value in the programs when we're at these record high prices because as a percentage, it is insignificant when we're selling like $1,100 feeder cattle like we were 6 years ago on this week, an extra $200 for it being natural. That's a big deal. It really is. When it's 3,000 and it's an extra $200, whoopee.
Yeah. And what's the cost to do that program? Do you remember?
The cost is in lost production with the implant in particular, the fallout, the management of them, the fallout, the audit is not significant in price to matter a whole lot. It would, on a per head basis, it would be, depend on your scale, but single digit dollar per head. But the real cost is lost production, additional paperwork, and then just managing the fallouts as a separate deal. I can't overstate that enough that if you do treat something, you have to get it off and you have to put it somewhere else, and it just creates more work.
That's what I always felt. It wasn't just the cost of doing the program. It was the loss of, if you're going to run your operation professionally, like we believe in, and you believe in, you take those calves off.
Yeah.
You got a sick one and it's the week before and he's going to be fine by shipping day, but you ran him through and he's got to now go in a different program. That was where I always saw the loss was in those good calves that just needed a little, they got a little sick or whatever right there at the end and you just need to help them out a little bit, not hurt.
Yeah. Yeah. So especially if you're raising them as calves and then running them over as yearlings, you're going to have a substantial amount amount of fallout. And then I can't overstate the implant too. And with the stalker operator, that's worth a good 40 pounds, let's say, that you're giving up. So
Yeah, and there's $120.
yeah.
Easy 100, and in today's world, that's over $200.
Yeah, could be depending on how you calculate it. But
Yeah, I mean, you're still gonna be well, you're gonna be $5. Let's say you're gonna be $5 no matter what, and did you get an extra quarter out of it, or how
yeah.
does that look? Yeah, I see where you're going. Well, let's switch gears here real quick to the Fed is kicking in $10 billion into the US economy.
Yeah.
Tell us about it.
Well, the money printing machine is back on, and is anyone surprised? I mean, this is totally out of the Donald Trump playbook. Is inflate away our problems, and what's this going to do to inflation?
Yeah, and I don't wanna get really political here because 'cause we've talked about this before, there's other podcasts for that,
Sure.
but our national debt is at 39 trillion, and we were told it's gonna come down to 0. I think that was the quote, and then, we're gonna get inflation under control, or there'll be no inflation, this will be the best economy we've ever seen, and here we are punching in another $10 billion into the economy to keep it propped up.
Yeah, and so the response to this has been rightfully, this is going to eat away the raise that you got, and it's a tax on the middle class. And I think that's it. I do believe for wage earners, this is not going to be a good thing. It's not going to be a good thing for the ranchers and farmers as we watch our input prices follow this inflation. Our prices generally don't get to appreciate to cancel out the inflation when you look long term at cattle and crops. So it can hurt, and there's a reason that they're doing it, and it's to prop up the economy and to inflate away our woes.
And do you think anything happens to interest rates?
Yes. So what do we do to combat inflation? We increase the interest rates. That's the one tool we have in our toolbox to control inflation.
So do you
And
think this keeps interest rates where they are or go down? Or do you think, or at least short term?
I believe that Warsh seems to be like he's acting like he's going to be very independent. As we all know, Donald Trump put a lot of pressure on the previous Fed chair to lower the rates, a lot of pressure that he did not succumb to. And there was some talk that Warsh was going to be more in the camp of Donald Trump, but he's really come out and said, "I'm going to be independent and do what I think." So I think if he sees inflation, he will have no choice but to raise interest rates. And how could we not have been more inflation when we're putting another $10 billion out there?
Yeah, that's
Yeah,
right.
that's right.
I am was visiting with my wife and she's thinking, I either need to keep this car forever and hope nothing breaks down on it. She's got a great interest rate on her car, almost paid off, but where we live, it's not like if your car breaks down, you can just, take it over to the next shop 2 blocks away. We
Mhm.
live 65 miles from town there at the ranch. We drive on a lot of dirt roads. Cars break down faster. I feel like if you live in Wyoming, you generally need a more reliable car than most other states in the country, especially if you drive on I-80.
That checks out.
So, yeah, so I believe in people driving paid off cars and all those things, and it's hard to live that life and do that in Wyoming, at least rural Wyoming, the way it is if you live in New York City or even Casper, Wyoming, I think. So there's that piece of it. And if you have a low interest rate on a previous car and you need to go get a new car and the interest rates are in the sixes, that does not make either of us want to go buy that new car. And so you take that out of Eamon's personal life and you take that into the big picture. How many millions of people are in the same boat as me that are ready to go get a new car and won't
Mhm.
because the interest rates are too high and we don't want to do that?
Yeah, and
It's millions of cars.
apply that to housing, which my brother works in that industry, and I was reading in an article that the housing has just like cars, it's slid to a halt because of the interest rate. And I read 1 in 7 jobs in this country can be tied to housing, which
Whether you're a construction worker or whatever.
yeah, yeah. One in 7. So this interest rate component is very interesting, and very interesting to keep an eye on. And we as cattle producers, you got you. I was not ranching in '08. I do know people who were, and man, did they learn in '08 how much a recession affects the cattle industry. It is devastating when we have those. And so, the pundits and the analysts have really been watching the broader economy, and rightfully so, because any sort of slowdown is just has the potential to cripple the beef and cattle industry.
So what do we do about this? Where do we see the cattle market going with this additional 10 billion put into the system?
Well, let's go right into the Dr. David Cole's article, Eye on the Economy, where he describes the K-shaped recovery, where we have the upper tier, the wealthy households and asset owners driving spending and participating in, the wealth effect, watching the stock market rise, watching their real assets rise. And you have the middle and lower class, which what they say, oh man, the
They, they,
economy,
they struggle with inflation, job
Mhm.
insecurity, record low consumer sentiment.
Yes, record low consumer sentiment, and that's not just the middle, and that's the take on the economy as a whole. It's record low consumer sentiment like that. That is not good. It's not good at all.
No, when we go right back to who wants to buy a car right now.
Yeah. Yeah, it is very interesting. And, you have the upper tier really feeling the wealth effect. I mean, people are watching their stock account, their 401ks and simple IRAs increase, and it makes you feel really good. And what Dr. David Cole says, for every $1 gained in the stock market, it boosts spendings by 5 cents. Every $1 in housing value, it boosts spending by about 7 cents. So what ends up happening is the people that own assets and watch them appreciate, they feel good. They don't harvest those gains, but they just see them on the screen. They feel good and they go out and they spend more. And it's that upper tier that is really driving the economy right now because they are looking at their real assets increase in price and they're going out and spending. So guess how that ties into, another 10 billion injected into the economy. Inflation drives those values even higher and makes them, feel even better. While
Yeah, and you bring it back to the ag business, and that puts a softener business model on new machinery sales.
Mhm.
So nobody, trucks, I consider in my business to be a machinery sale. But tractors, feeders, balers, corn planters, whatever it is, all of those things are all going to be softer. But what guy in the corn business can afford to go buy a new planter or a new harvester?
Yeah, those guys they're sitting on a pile of equipment. When I bought my tractor earlier this year, I had 3 dozen to choose from. There's one particular model that I wanted, and there were 3 dozen of them that they had on hand. You
And that's
gently used 2-year-old tractors.
right. And that's for you. Like when we buy a tractor, it's usually a brand new tractor because I plan on having that thing. We're more on like wear a tractor out than we
Sure.
are trade them in because we're not trading them in that much.
Yep.
Still have a Blue Def tractor.
Yeah.
And I asked the guy, I said, hey, what's it cost to replace this tractor now? And, say it was 100,000 when I bought it. Basically you were paying $1,000 a horsepower. And now it is like 175 to 200,000 for that same
Mm.
tractor. And it's either almost doubled or nearly doubled. And so I'm in a different deal than a regular corn guy because I'm not wearing my equipment out in the same way. And I don't know if it's probably not a great model. And we've talked about this with four-wheelers too. But
Mhm.
that guy said to get that tractor is going to be almost double in price. And I said, well, how much just to replace the engine? If that's what, the engine goes out on it. He said, oh, it'd be like 20,000. I said, well, let's just do that. Why would I go buy a new tractor when I can just keep this good one that's pre-Blue Def and put a new engine in it?
Yeah, that makes sense. And you got to look at all avenues. At Wineglass, we do like to buy value. We've been buying vehicles new, but pre-COVID, we were buying used vehicles and then trying to trade before they were really fully depreciated. So we tried to buy value in the tractor market. We try to buy and sell value, just like cattle.
Yeah, I've totally shifted as the cost of this equipment has gotten so much higher.
Yeah.
I have shifted to let's make things last longer, and where trucks are now 70 to 90,000 for a ranch truck. And
Yeah.
we put a lot of miles. So we need a reliable truck. We can't go buy some, kind of half used 50,000 miles on it. We buy things pretty much new when we buy a pickup.
Yep.
But we're driving those trucks, 50,000 miles a year. And we've gotten to a place now where we're driving quite a bit less. And I didn't realize how many miles we were putting on with the sheep part of our business because we're so spread out with our sheep business. And we're very spread out with our cattle business, more so than our sheep. But we have you to take care of them, and we don't have to go out there and tend the camp every day and check on them every at least once a week, like we can send our cattle out and not have to do that. But we were trading a truck in a diesel 1-ton truck every 6 months, and now we're not. And
Yeah.
part of that's due to selling the sheep, and part of that's due to every truck I have, we just take better care of it. And
Yeah.
we try not to put those miles on. We're more cognizant of the miles we're driving because we're trying to just be more careful with it. And I think that has to do with the economy in a big way.
Yeah. Yep. I agree.
When diesel was $2, $3, you didn't care near as much about fuel as you do when it's $5.
No, it makes a big difference. And yeah, and when you sell the sheep, you got to scale out of equipment at the same levels. So that makes perfect sense to me.
Yeah, and we didn't sell out of the equipment. We are selling some sheep camps, and we sold some horses and
Yep.
things like that. But excuse me. And I think that there's value in just keeping that stuff that's already maybe paid for or nearly paid for,
Mhm.
rather than getting rid of it because you're going to have to replace it at some point.
Yeah, that makes sense. And it's tough, like you said, it's tough to go out and buy something today.
Yeah, which just shows the squeeze because we're both pretty large operators compared to the average 50 head operator in the United States. And those
Yep.
guys really have to watch it. And you and I are sitting here, quite a bit larger, and we're watching those things really closely.
Yep. And Alan Nation would say when times are at their absolute best is when you need to be the most paranoid. And the inverse is also true. When times are at their absolute worst is when you need to be the most optimistic.
I was
And
talking
we're
to my
out of
wife.
time.
I was talking to my wife the other day, and she told me, she's like, you ought to get something that you just carry around with you that says eternal optimist because you don't ever see a bad day. I was like, well, some days are worse than others, but if I took everything and beat myself up over every piece of bad news I get, I would just be down all the time.
Yeah, 100%.
So, well, let's talk to us a little bit about some other things you want to visit with, and then we can go another 5 or 10 minutes or so if we need to. But is there anything you want to really get into that we haven't talked about?
Yeah, I do. I got one to kind of close on, and this is a little bit of Alan Nation and Warren Buffett. I just want to preface it with that. It's their idea, but the Fed deciding to print $10 billion is not surprising. Inflation and its compound interest effects is mind blowing in what it can do and what it can rob of you. And what you need to do, and Charlie Munger said this, you need to do whatever it takes to get at least $100,000 in your bank account to start to get compound interest working for you. So even if you're a blue collar guy, you really need to figure out a way to get there. You and I get the most benefit of compound interest than anyone on planet Earth because guess what? Our compound interest started with my great grandfather. Yours did too, and we are at the benefit of this.
Great, great, great grandfather, both
You're
of
right
us.
for both of us. You're right, and we have been on 5 generations of compound interest, and it's been. It defines our success to a tune of 90% of my success. I would say is the fact that I have been on the receiving end of 5 pounds of compound interest, and you need to not be surprised when the federal government comes out and inflates away the value of things. I own debt. I own debt to the tune of millions of dollars, and guess what? That inflation does for me. My land resets in value. It beats or exceeds the inflation values. The debt that I took out 10 years ago on that, guess what? I'm rooting for inflation because I want that debt to be worth less. And you really need to position yourself. This is just a closer for those of you who stuck around to the last hour is position yourself to be on the right side of compound interest. And I'm going to get biblical here a little bit. Proverbs is you need to leave inheritance for your children's children. And you and I have been on the benefit of that. And I just wanted to give that shout out that we are just lucky SOBs who have participated with compound interest at a generational scale. So my advice to guys getting started out, do whatever it takes to get $100,000 in your bank account so you can participate in it as well.
Yeah, and it seemed like a lot in 1885 when my great-great-grandfather bought hay meadow ground for $1.75 an acre. That
Mhm.
seemed like a lot of money in
Yep.
1885, and today that ground is 10,000 plus an acre, and I have no plans on getting rid of it, and I
Yep.
hope that my great-grandchildren also get to participate in owning that same ground that was purchased for $1.75 an acre.
Yep, and my great-grandfather, he bought 6 sections for $6 an acre. Thought it was crazy at the time, but, well, it's $1,000, it's at minimum $1,000 now, if not. I think where pasture values are gonna fall in here, and we're gonna see about a 50% increase, and inflation is gonna do a lot of that heavy lifting, but I expect when the dust settles with this, with everything that's happening, inflation and the cattle market, I think we're gonna see $1,500 an acre pasture prices in the Western Sandhills.
I think that there's a lot of opportunity in just the way you said it, and maybe said a little bit differently, is that if you want your operation to grow and you want to make it sustainable for you or your kids or your grandkids, and it's hard to talk yourself into paying $10,000 an acre for meadow ground and or $500 an acre for desert ground where I live, and you want to do something like that, but are adverse to debt, your operation cannot grow.
Yep.
It will be the same in 10 years as it is today if you're not willing to take on any risk to grow it. And fortunately for Logan and I, we come from a long line of risk takers. And so we have been able to be the beneficiaries of all of those risks taken. And I think that it's a good thing if that's your goal is to grow and have a sustainable operation. If you're happy with, running a small group of cows and having your town job and that insurance and those things, then that's awesome. But if you want to be a self-sustaining ranch that can run off of that, risk comes with that.
Yes. In the terms of borrowing and ideally long-term borrowing and letting inflation eat away the value of that note.
Yep, that land will pay for itself over time. If you can keep up with it, I think the opportunities that Logan was talking about is you don't ever have to be paid off. The economy will do that for you. It will
Mhm.
start eating away the value of your land. You just keep making those payments and you'll get enough ratio there that your assets will be high enough that you can go ahead and borrow more money to get more land over time. Is that right?
You just gotta get the cash flow right. It's very easy in theory.
Yeah.
But the problem is if you mess up the cash flow, the whole thing goes down. It's a delicate game, we play.
Well, timing is always crucial. You want to do
Timing.
that at 2% interest, not
Yeah.
6% interest.
Yeah, 100%.
So anyway, I think that was a great one to hit on, Logan, and I think it's very important for people to understand the value of the ratios of the ownership of their property, and
Mhm.
also that's what the banks go off of is the ratios, and
Yep.
then also what you said is bring it into the detail of what inflation does for you.
Mhm. Let inflation be your friend.
Yeah.
Because guess what? It's happening.
And $100,000 seems like a heck of a lot of money, but
It does.
as the value of the dollar goes down, 100,000 is worth less and less every time they pump in another 10 billion into the economy.
Yeah, and I can run it in Excel and kinda show you why that kind of is the magic number, and it compounds from there, but Charlie Munger, that's him, and he was a smart dude, ended up a billionaire.
Yeah, one of my next books I've got on the list is Charlie Munger's Almanac.
Love it.
So, well, Logan, let's put a bow on it. Is there anything you want to hit on? Maybe just tell everybody what we talked about, quick recap, and then we'll put a bow on it.
Yeah, the market recap was good, got into some indications that the supply isn't gonna get larger, it doesn't appear, but looks like beef has peaked, I wanna say, is that I'm seeing people calling that. So that was kind of interesting. And then that K-shaped economy and just trying to get into that asset holding class is critical. And I think many of our readers or listeners are looking to in that position or looking to get in that position. And I hope we dished out some good advice for you there. What about you, Eamon? Any highlights?
No, I think we hit everything well. I'm excited I think next week, every week, we just move closer to what either this El Nino is going to bring or where we're going to be personally in our operations with the animals we have, if we're going to move them sooner and how all of that takes place. And and I'm interested. We'll have to talk on the phone personally about our own
Yeah.
operations and when I need to send you stuff or you need to, hold stuff or whatever. So I think all of that stuff is very important and, good luck out there. I hope everybody gets a big shot of rain and we can turn this thing around.
Yeah. We'll see you guys next week.
All right, take care.
Keep running on grass.